Shamu joins us from IG Markets in Melbourne now. Stan, good to see you there. It's pretty quiet, isn't it? And what do you think? Is the market's going to remain pretty range bound for the short term anyway, until we get to September or Jackson Hole certainly?
Morning, Bridie. Yeah, absolutely. We are seeing a bit of repricing in markets. Obviously, QE3 has been the main point of focus for most analysts over the past few weeks, and it certainly does look like we're approaching a time when most analysts are starting to say, hang on, the data is not that bad. We'll probably see the Fed hold off in September and wait for further economic confirmation before taking some action. We've already heard from Goldman's and UBS change their stance, and they already think that the Fed will not do anything in September. The biggest moves, I suppose, have come in the US bond markets, where we've seen yields continue to spike as bond prices fall and reprice expectations or reduced expectations of further quantitative easing. So that has really been a positive for the dollar yen. We saw it nudge through 79 overnight, and obviously Japanese officials will be very happy to see that. A weaker yen is obviously beneficial for the Nikkei, as it boosts some of their export markets and most of their major exports. So that has been a positive for the dollar yen. We did see obviously overnight further confirmation that the Fed will have room to take action should they need to, with that CPI reading just coming in slightly below expectations, showing a bit of cooling in inflation. It also seems like industrial production is on track. We saw a tick up in industrial production, helped by an increase in motor vehicle output and as well utility use. It does seem like the Empire State Manufacturing figure came in slightly below consensus, but it's been quite strong. I think it had been rising since October last year, so it's not too concerning from that perspective. But if you do look at the risk currency space, we haven't seen too much of a movement. We saw, like you were saying before, the Aussie dollar managed to creep back up above 1.05 momentarily, but it's still struggling around that level. Obviously, we fell to about 1.046 in the late Asian session yesterday, and that has really been the theme, whereby we've seen different assets just oscillate around key levels without a specific direction, continue to be sort of flatlined and range bound, and that seems like it will continue to be the case, obviously with the euro as well, which is quite steady ahead of the Eurogroup and ECB meetings in the first week of September. So there's quite a bit to look out for there. At the same time, though, some investors are feeling it's probably better to have positive US data than to rely on that instant gratification from further quantitative easing going ahead. So this could be one of those situations that turns out to be a positive in the long term, as long as assets manage to hold their ground for now.
Stan, sorry to interrupt. I'm just going to bring viewers across the ASX numbers coming in now. These are the full year 2012 numbers. Underlying profit after tax, 346.2 million. That's down about 3%, down 2.9% from a year ago. The final dividend, 85.1 cents a share. And certainly looking at some of the commentary there, ASX saying both retail and institutional investors have reduced risk appetite and activity levels, yeah, just a reiteration there, underlying profit after tax coming in at 346.2 million, so that's just down about 3% from last year. And revenues for the full year from ordinary activities, 783.8 million. So those numbers just coming through from ASX right now. Stan, just wanted to get your calls then, given what you were just saying earlier, then for the market open today.
Yeah, well, ahead of the open, we're actually calling the market up about 0.2%, so that's about 4289, so it's not too much in it. We have seen fairly flat opens over the past couple of sessions or so. We'll probably look at earnings today, I suppose, as the main drivers of sentiment. Yesterday we had obviously CBA, which will probably get some re-ratings today. I think there was one that came through this morning from Credit Suisse, downgrading it to an underperform. We will obviously monitor the lines for the likes of, I think AMP came out this morning. They look like they have a strong number their underlying profit was up to about 491 million. The consensus was 469 million. So they look like they've beat consensus. Their dividend was 12.5 cents per share, which was in line, but it was 55% franked as opposed to the 50% which analysts were expecting. So we could see a positive reaction for AMP. They